My name is John Deluce. I'm the CEO and founder of Abitibi Metals. Abitibi Metals is traded on the CSE under the ticker AMQ, the OTC under the ticker AMQFF. So we really have an exciting story. We're a Quebec-focused exploration company. We optioned at the end of 2023 the B26 deposit. Very unique opportunity in the fact that up until us optioning it, it was developed by an exploration arm of the Quebec government, leading to them putting $25 million of investment into the asset, having an initial resource that we've leveraged to grow into our maiden Abitibi resources, published resource of about 18.5 million tons combined. But really very excited. High leverage asset, copper focused, secondary gold with also zinc and silver. So very strong polymetallic deposit in a market that is really hungry for these type of assets. And we are fully funded out to Q1 of 2027. We have a treasury position as of today of $17 million. That funds the remainder of our 17,000 meter drill program through the end of the year, in addition to another 25,000 meters next year. So very excited to continue to highlight what is a company making acquisition that we made at the end of 2023.
Right, and why is it better in your hands than theirs?
The government, SOQUEM, are excellent explorers, but their business model is using Investment Quebec investment in order to develop assets to a point that they're able to attract outside capital in order to move projects forward. So SOQUEM is a very strong early stage exploration company. They are less involved with taking a project from resource through to PEA, advanced level study stage projects. So we've been able to leverage our network with a really strong lead VP of exploration, Louis Garrity, who has recently come off of a successful takeover with O3 Mining and Agnico. He left O3. He has a very strong VMS background combined with orogenic gold, exactly the specialty that we need for B26. So we've built the team around B26 versus having a team going into this that we tried to merge with the asset. No, we really believe you build for the asset. We've been able to do that, and I think we've been able to take what was a great starting point by the Quebec government and really build the pieces and team to take it to the next level.
Okay, so their exploration, your development, but there's still a lot of drilling to do. So how do you kind of prioritize meters between sort of step out and for scale and obviously infill for grade and PEA confidence?
Yeah, so I think I'd say we're still on both the exploration and development spectrum. We're certainly not a pure development company. I think that also speaks to the fact of who we're getting this asset from and that this deposit is completely open in all directions. So the program that we're focused on for phase 3 that's currently underway is 80% step out, up to 500 meter step out at the deposit to really showcase, okay, could this be a Selbaie sized deposit? And just to remind your listeners, the Selbaie mine is 7 kilometers away from B26. This was a deposit that was in production for 20 years up until the early 2000s, produced 53 million tons of similar polymetallic material, very similar mineralization, very similar recoveries and structure as B26. So can we move this from 18.5 million to something that is 30 to 50 million tons? That's what we're trying to swing for with this drill program, is to try to showcase a path that there's a lot more growth at B26, because I think that's really what excites the market. You go down the path of development, the market gets bored, and it's certainly important, and demonstrating that we're at critical mass is an important step for this project, but we're really excited about how much upside there is in exploration, and that's why we designed this program with that in mind.
Well, I think the market gets excited about exploration and discovery. It gets excited about near-term revenue as well. And the developers going to sit in this, the sun curve, rather depressing middle. But what are you trying to be? Because you described what they were and what you are today and I just want a sense of like the ambition and the aggression to the exit point, but you got to know what it is to do. Be aggressive or ambitious.
Yeah, so our goal is we are balancing what is a deposit with still a lot of exploration upside, with ensuring that we're managing our capital and investing our capital the right way. Drilling for the sake of drilling is great, but if you're not drilling economic tonnage, at the end of the day, you could drill in all these areas, you try to put a PEA against it, and you realize, okay, we have all these isolated zones and the big picture doesn't matter. So we have a handle on the big picture. At the end of the day, our goal is to produce an economic deposit that we can sell to major. There's very few of these high grade polymetallic deposits available in the market. So we're trying to balance both of those buckets. And we can do that because of there's still being, in our opinion, a lot of upside still in the deposit. So our goal is we are doing internal scoping that is helping with guiding where we're focusing on our expansional drilling, focused on the extending high grade lenses and drilling in areas of the deposit that we think is understated in terms of grade. And by allocating our capital that way, one, we're going to be able to expand the deposit, in my opinion. We're going to be able to expand the deposit in areas that are going to help with the future economics. And it's also going to instill confidence to a major mining company that we're investing capital the right way, that could encourage one of the major mining companies to make a strategic investment into Abitibi Metals. So we are really looking at a holistic approach on how we allocate capital with our end goal of mind is how do we attract a major to take it a strategic investment and then lead to this being taken over and developed by whether it's a major in the area, or we've been surprised with even the interest of the producing companies that aren't currently operating in Quebec.
Right. So how do you balance that? Going after the tonnage, which is attractive to bigger companies, or contains copper equivalent numbers, which is attractive to bigger companies, and talking to the market and delivering economic studies, people can get a sense of what you could be. Because I know the big guys don't need it, but the market does. So what's the time frame, and how do you go after that?
I think that strategy has to be flexible. Like if we hit a 30 to 40 meter zone and a 500 meter step out during this program, then the market is going to want, okay, how much bigger could this be? The expectation of economics gets pushed a bit down the road because, in my opinion, the market will focus more on resource updates because there's a lot more to build here. So I think we have to be flexible with the strategy. Our hope for this project and what we believe the potential to be is this is a deep-seated deposit with strong tonnage per vertical meter. We are hopeful we are able to hit in some of these large-scale expansional holes, and then we can start to speculate on how much larger this deposit is. So in our view, we are focused on resource updates. We have to deliver a PEA as part of our option agreement with SOQUEM and the Quebec government. But certainly our goal is to demonstrate the scale, and that's where we think we're going to be better rewarded by the market. And as you know, the majors can do their own internal economics. They want to see size and scale. That's the key thing that will attract them to the table.
Right, and so coming back to to do that, you're going to get your targeting right. So coming back to your sort of targeting methodology, what weight do you put on sort of 3D modeling or geophysics or structural interpretation? Because you've got to kind of answer those kind of geological unknowns as part of your kind of phase 3 drilling. So how are you getting after it?
So 3D modeling is important, and that was the key basis of how this drill program was planned. Structural controls in the deposit is important and is part of what we have brought in some specialists to assist with interpreting phase 3, especially as we step out with larger to connect it to the main system. So 3D modeling structure is very important because this is what we call a hybrid VMS. This is a structurally controlled copper gold stringer zone. So structure is more important than some typical VMS systems. So structure is important. Downhole geophysics, quite important. Historically, there's been a noisy response at B26. We're getting plates, but they're not as clear as other VMS systems. We've brought in a specialist that worked at the Selbaie mine that has worked at other deposits in the area. we are working with him to help improve our targeting and also manage the downhole geophysics that we're doing as a result of this follow-up. So really modeling geological interpretation, that's a key part of our strategy. That is ongoing now and will be a big press at the end of phase 3 to get us ready and revise targets for phase 4. So we really are using all tools at our disposal to increase our chances of success at B26.
Okay, and you've got what, 3 rigs turning? Is that what we said?
3 rigs turning, that's correct.
Right, okay. So with regards to, and that's obviously the most expensive bit is drilling. What are you doing to kind of, I guess, optimize things like directional drilling and better targeting? Obviously, help. What are the other things in the armory that are helping you?
So I think we're looking at all tools. There is a specialist that had that really helped a strategy of a explorer in Newfoundland that's developing a VMS deposit out there. We're having him come up to site to review the model and just provide new ideas to the team, and also challenge the thesis that we have at B26, given that the specialist has seen VMS deposits all across Quebec, Canada, worldwide. So I think we always want people to challenge our current working thesis, because that's how we're able to better put the best plan forward. But really, what do we do around drilling? 3D modeling is huge. We've hired specific internal specialists to help with modeling structural work, geological indicators, to build a better geological model to go into our next resource. As I mentioned, the downhole geophysics is important, whether that's downhole, we did surface gravity, we did a VTEM. So taking all the geophysical methods that we can to build into our targeting. And also, I think we're also trying to get a better idea of exactly the signature of Selbaie. We're working on various, because the Selbaie mine, there wasn't a lot of publicly available data. We have what is available, but we don't have detailed models or if this was modern day, what would be publicly disclosed would be a lot more. But this was something that was operated by a major between the 80s and 90s. So there's less data available. We're working on methods to get access to a potential data room at Selbaie, and that could benefit us significantly, and also look at potential structures that came off of Selbaie across the B26 project. So we're working on various methods, and we think that will really come together to put B26 in the best chance of success.
Right. When you're sort of looking at the kind of the footprint of the deposit and how that's evolving, are there any sort of insights yet, or was there still too much drilling to be done with regards to open pit, underground, hybrid? Have you kind of thought about those things? And I guess you may as well talk to metallurgy and etc. What are you learning?
So yeah, the 2024 resource was purely underground. Now, we spent a lot of time running pits, but at the time that we made the call on the resource, we felt that the underground was more reflective, given the high strip ratio that was in the open pit. However, there's more drilling to be done and more assaying to be done within the first 250 meters vertical to really answer the question of whether or not the open pit is feasible. Selbaie had an open pit, had similar levels of overburden. When we run the pit shell around what is the high grade core with the lower grade disseminated unit around it, there is a very strong grade using a 0.35% copper equivalent cutoff. So our goal is to demonstrate that there is an open pit to complement the high grade underground. We think that could help with justifying a larger mill size for the operation, like at the Selbaie mine. So certainly as of today, underground deposit, we see open pit potential. We'll continue to work on optimizing the pit design that we're able to incorporate that into a future resource. There's also a lot of leverage in this deposit. With the high gold credit, one thing that we discussed last time that I want to note is we have one of the highest gold credits associated with the primary copper deposit in North America. This is a gold-rich VMS deposit. That offers a lot of upside. And if we, like, the resource is an average of 2.18% copper equivalent. However, we use today's gold prices, that moves to over 2.5% copper equivalent. So there is a lot of leverage on the gold price. We're the first to model the gold on its own. We, as we've disclosed in phase two, and we believe we'll be able to continue to improve on. The Western Plunge had a high gold credit. We've announced visuals on 2 of the follow-up holes in the Western Plunge that we believe will have a good gold credit. Those will be announced next week. But to answer your question, underground today, we see the potential for open pit. More drilling and assaying needs to be done to validate the open pit. But yeah, lots of room for expansion on both fronts.
Does the gold credit change your view, or will it change your view of the drill targeting, for instance? I mean, on silver credits as well, or is it just you can't tell the future price of copper, so let's just kind of get on with putting something together which could be a mine?
Well, our feedback from the producers in the region is they really like the gold upside. The Larone mine on the Cadillac Break was a polymetallic deposit and mine. Some of the best gold zones that really made what was both Agnico and Larone were under 500 to 1,000 meters vertical. That's where the gold really picked up in the deposit. I think that's part of what excites the majors with B26 is we are hitting better gold grades at depth, and is there a richer gold source somewhere within this deposit? For example, in one of the holes we drilled in phase one, which we drilled within the high grade zone, that was 11.5% copper equivalent over 10.6 meters. That had 4 samples in a row over 25 grams gold. And that was within a massive chalcopyrite. Is there a more massive source of these stringer zones where we're seeing that grade in a more massive unit? That's part of what my technical team is searching for, whether that's along strike or at depth. We believe the project has the potential to have a massive source like the Larone mine had at depth. So certainly the gold is important to us, listening to what our end potential buyers would like to see in terms of upside, and modeling that out on its own to be able to follow out on what is the higher grade controls within the deposit.
Okay, and with regards to kind of, I mentioned earlier, the metallurgical work done today, in terms of like further metallurgical work planned and get representative recovery numbers and so forth, how's that sort of factored into the workload and spend at the moment?
So the met work done so far was in 2018 with SOQUEM's updated resource. Strong recoveries, 98% on the copper, 90 on the gold, 96 on the zinc, 70 on the silver, in line with Selbaie. So it is a strength of this being a hybrid strainer hosted system versus the typical massive sulfide VMSs where you see some contaminants. It is a system that has stronger recoveries, again with the history of the nearby Selbaie mine. So as of now, we don't have anything in the budget over the next 6 to 12 months, but it is part of our scoping plans, our larger scoping plans. So nothing in the immediate future. We have good initial testing that was done by SOQUEM, but it is something that will be incorporated once we get further along the path of our scoping studies.
Right, given that historic data, in terms of like deleterious materials in here, arsenic, antimony, etc. I mean, what is it relatively clean? I mean, what do you know about this? And maybe Selbaie has some input on that as well.
So one of my advisors, when looking at the recoveries, had thought it was too good to be true. He went back through, and he's been involved with a lot of mines. He went back through the report and compared it to Selbaie, and there was very little contaminant as part of the testing, and it's certainly a strength that he highlights at the project versus others. So very clean met work in the initial testing, but certainly something that we have to do additional work on.
Right. Okay. Because obviously it'll affect concentrate abilities, etc. And just in terms of like just kind of trying to understand the future of these things, because sometimes companies get stuck if they haven't got everything lined up. But potential smelter, I mean, where you are, one would suggest you've got choice there, but no one wants to build one of those things. So is that all local to you?
There's a smelter To the east in Metagami, there's the Horn on the Cadillac break. But certainly, I think with the Selbaie mine, they had a 5,000 ton per day mill on site. We believe that with the size and scale of B26, with our expectation of growth, that it will justify a mill on site, or at the historical Selbaie mine, we have a power line that runs through the project, a substation. So a lot of that expensive infrastructure is in place that we can leverage. So certainly a lower capex build compared to other areas of the Abitibi. So certainly where we see the project going is this is a big enough deposit that would warrant, and especially if we can combine, and I think we chatted about it a little bit in our last conversation, if we can add on to our prospects within the area, within 10 kilometers, that will be consolidated through our government partners at SOQUEM, especially their really exciting new discovery at Wakasik. If we're able to build on a secondary deposit over 10 to 15 million tons, building a central mill here becomes, in my view, a clear path. So that's our view. We see the upside in B26, upside in consolidating other assets with our government partners, and that scale coming together, justifying a build for a central complex.
Okay. With regards to SOQUEM, are there any, you told me about the PEA, but are there any kind of financial commitments tied to earning that 80%?
I believe we only have $3.5 million left in our work commitment. We've completed over 10 million since optioning the asset. We're over 5 years ahead of schedule. So really our major remaining commitment is the delivery of a PEA, because we are funded to complete our work commitments. We'll have a final top up of equity upon exercising the 80% option, which we'll complete at some point in 2026. But other than that, our financial commitments are complete and we're funded for the remainder.
Right. And after that point, having been involved with an equity position, is there a sort of intimated kind of financial government backing that I can infer from this, or does this maybe influence investor confidence, or is it, quite frankly, a barrier for any kind of strategic coming in? How do you view their role?
I view them as a very friendly and supportive partner. At the end of the day, they want to see this sold to a producer and this developed into the next mine in the northern Abitibi. Given how much economic benefit the Selbaie mine had, they built a small town to the east around that mine. And the Metagami mill and mine is on care and maintenance. Casa Berardi is at the tail end of production. So there really isn't a lot in the northern Abitibi as of today in terms of jobs and mine development. So they want to see this developed. In terms of the equity holder, which would be Investment Quebec, they are certainly a provider of capital, especially once we produce a PEA and are able to show that this is an economic development. So in terms of financial backing, part of the reason why we are continuing down the path of internal economics and then leading to a formal PEA is being able to produce that opens up the door to larger Quebec institutional financing. So by having the government partners, we are aligned with them. It does open up the door to potential funding once we advance this to a later stage. But in the meantime, we did get in our last finance, we got investment from CDEX, we got investment from NQ. So there is still support of government and entities at where we are at in the exploration process that have financed us because they see the potential in B26. The government wants to see development in this camp, and that's why they've invested the capital that they have, not only in B26, but also in the Wakasik discovery that they drilled 15,000 meters at last winter. And I've heard they'll be drilling a similar budget this winter as well.
Is SOQUEM sitting on other assets?
They have a very large portfolio across the province. Now, the majority of that is earlier stage projects. Within the B26 camp, they have 2 additional projects that border B26. Our goal is to consolidate and build on our partnership. We hope and we anticipate being able to complete 1 transaction before the end of the year. But yes, within the camp, they have 2 land packages that surround the Selbaie mine. And outside of B26 area, they have many projects. I think their portfolio is 70 plus across the province.
Okay. But for now, you've got 8 kilometers underexplored trend to get after, and I guess you've got to show the market that you can deliver what you say you can. So I was just intrigued to sort of see what the optionality is further down the line if you do continue to deliver. Look, there's you've got 18 million-ish cash. You've got a market cap of under 40. Market's clearly not getting something. Is it just a question of you haven't been talking to the market, or is it a question of they're not sure whether you can execute?
I think it's a combination of both. I think talking to the market, we need to get our story out there. I think we're still quite unknown to the market. We have very strong institutional and banking contacts. Our last deal was a bought deal by BMO, very small company to be involved with BMO. But we need to get it out to a retail audience. We need to have a better balance of our different buckets of investors. That's why we're excited to be ramping up our conference schedule, roadshow schedule, taking opportunities like this and other platforms to get our story out there, especially ahead of a period that we think could be very catalyst rich. This project has the potential to deliver world-class results. We've seen results over 2%, 2.5% copper equivalent over 65 meters in phase one. We think that this project has the potential to deliver a high-grade lens at depth that really grabs the market's attention and says, this really is a world-class deposit. How much more of this high-grade mineralization is there at depth? And that's what we're striving for with this program, and what we're excited to tell the market about. But again, we need to build an audience to be able to have that recognized in the market. And that's what we need to do. In terms of the second bucket of, is the market worried about us not being able to deliver it? I think part of the issue we had at phase two, I think I mentioned before, is the fact that we didn't deliver that program timely. As soon as you don't deliver timely, people think you're sitting on bad results. That's why we made the changes within our team. We brought everything internal. We have a very strong operational team that's full-time Abitibi Metals now, that we're really controlling and building out the depth within our team, controlling timeliness, and improving the quality of our drilling. So I think we have a bit of confidence to rebuild with our followers. I think we've had what has been a trading range that has been bound within a range for this year so far. We're trading just under deal price that we had with BMO. But I'm confident that we push out of this range, there's going to be a lot more buyers at 40 cents than there is today. So we're really driven to rebuild those weaknesses from last year, from early this year, and start deliver on continuous drill results to really showcase, okay, we've built up this thesis, we're delivering, and we have a plan to really continue momentum through the end of the year and next year.
Okay, and who do you compare yourself to in terms of peers, genuine peers? Everyone's going to say Foran, but who realistically, do you aspire to be?
I'll add a different one, certainly Foran, but Firefly, which is in Newfoundland. Firefly is on the ASX. They certainly get healthier valuations, and we've even seen that from interest from ASX companies that have inquired with us about, inquired with us about taking over Abitibi Metals and B26 because they can't believe the valuation that we are getting at the time, and they feel like it would be much better reflected on the ASX market. So certainly that's something that drives us. But at Firefly, with the main mine, similar, they have what is a hybrid system, stringer zones that come together. It's a very deep system. They're drilling it at over a kilometer depth now. But again, it showcases how if you have strong continuity, good tonnage per vertical meter, deep deposits are not a challenge if you have that strong continuity and development plan. So Firefly has performed extremely well. It's supported well by retail in Australia. Certainly a focus of us getting down to the Australian markets to introduce our story. So that's part of our plans over the next quarter or two, is to get it down in front of retail and institutions in Australia.
Okay, so just time to prove up and transact. That's the kind of story we're looking at here, right?
Prove up and transact, definitely. Whether that's transact and strategic investment from a major, or also transact on, from our standpoint, building on our government partnership. Is there other opportunities that come up that we can take advantage of? It all depends where we're at. If we're rewarded with our market cap and by the drill bit this fall, and in Q1, we'll get more aggressive in terms of our growth plans. But we want to ensure that we're transacting at the right time, given that we are well funded and have a clear path over the next year and a half.
John, appreciate your time today. Thank you.
Likewise. Thanks, Matt.